Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, May 12th, 2023. So, as usual, I just finished wrapping up the premium video for the folks in the gold room, and we had the same question we had last week, right? The market, the indices themselves are not doing anything. They're just flip-flopping around like a carp. So, last week in the free video here on the YouTubes, we were trying to answer the question as to whether we should be swing trading or day trading. And after looking at all the pieces, we determined that day trading, or just in general, very, very short term trading from one day to the next, is the best course of action in this market. And the reason being is that the market has no idea what it wants to do, and that is evident by the price action and the lack of confluence amongst different markets. So let's very quickly in this video try to answer the same question going into next week. I'll give you a spoiler, and that is it's still going to be a day trader's market. There's a couple of things that have developed this week, and then most of the indices and everything else is basically the same. So let's start here with SPY. There's really only one level I want to give you here, and it's 414 on the SPY. 414. It's the 50% retracement of the high to low. So you should know what that level is. Have not been able to get two consecutive closes above it here on the weekly chart, and you are now starting to get a little bit of momentum loss. Again, these have been your weekly candles, so these are just absolutely nothing, and it really doesn't change anything because you're still basically just trading below 414 with tiny ranges and declining volume. So the SPY here is not giving too much away, but that's okay. The SPY is kind of this middle thing where it looks better than everything except the Qs, but it doesn't really tell the story. So let's see if we can tell the story in a more accurate way. And the most accurate way that I know to tell the story here is to look at the two markets, the best one, which is the Qs, the worst one, which is the IWM, and then show you a couple of peripheral markets that might color what you see. So if I show you the Qs, this looks like it's a bull market. It looks like it's going to an all-time high, right? Everything here, for the most part, this could be better, but it's serviceable. You still have up thrust. Up thrust here. This is fine. This is fine. You're holding the 21, 50, 200. So that's all fine. That's all fine and good. And this is the best market, right, by far. Everything here looks aligned, looks bullish, and it just kind of works in line with what we've been talking about here on the free videos, and that is the only thing that's tradable for longer than a day is tech. And more specifically, it's like 5 stocks. It's going to be Amazon, Google, Microsoft, Apple, Nvidia. I'll throw in Netflix. Maybe Tesla next week. We'll see if Tesla gets a turn. But that's about it. It's like the top 7 or 8 stocks in the world. And then everything else has been pretty garbage. So the Qs here look decent. Again, just a tiny little range here this week. Absolutely nothing. Low volume as we have become accustomed to, but no changes in the signals, and this remains the best market. So take a snapshot of this in your mind. Understand that it is bullish. And then let me show you IWM. And let's not make excuses for IWM. Let's not say, hey, well, it's it has all the regional banks, so that's why it sucks. Well, yes, but overall, look how bad it sucks. So the Qs have full alignment. All the moving averages look like this. The IWM has full alignment, and all the moving averages look like this. Completely bearish. The weekly chart, heavy downward bias there, downward bias here, downward bias here, downward bias started back here. You got another thrust lower here. This is fully bearish. The weekly chart is degrading rapidly. You now have the 21, 50, 200 dynamic going on there. So notice how this chart is, 1, hanging on by a thread, and then 2, notice the absolute and total mirror image that this chart is relative to something like the Qs, right? So I show you this because what I want to see if I'm going to start swing trading this market is a little bit of confluence, right? I don't need the IWM to look good. I think that's too high of a bar, but can it at least look serviceable? Could you maybe get back above 176 here, get back above the 50? If you can get out of this range, it would certainly help. But at least over 176, get above the 50, which it has not been able to do. It broke the 50 up there, and you see how it hasn't even really tested the 50. So again, as we look at this, the lack of confluence is my problem. Let's go to for swing trading, that is. For day trading, none of this matters. You just trade the 5-minute, 1-minute chart all day and call it good. So then let's look at something like HYG. This is the junk bonds. And I like to look at this with you guys just because it gives me a decent understanding as to kind of a really important market and the risk appetite in that market. So with HYG here, you can see that it started to really, degrade a little bit, right? You're trading below the 200, you're trading below the VWAP, you're trading below the 21. You're still kind of sandwiched in this little box here, so it hasn't actually done anything. But as the longer that it trades sideways, the more that it starts to degrade. You can see the weekly squeeze here now has a downward bias. This was already fully bearish, and this is just kind of mixed here in terms of the signals. This is giving you a downward bias, and this is just completely neutral. So this would skew it just ever so slightly negative, the HYG would. But then let's go to the one thing that did change, because the HYG didn't really do much this week. But there is one major product that did, and it's the dollar. So if you happen to be of the belief that lower dollar is bullish, higher dollar is not bullish, then we'll see how that theory works next week. So with the dollar here, one, if any of you can have an answer for me as to what's up with these candles here for the last 2 months that turns out to be true, I would love to hear it. But the dollar here finding support across this double bottom, and you'll note that this is actually the first time that it's had 2 closes above the daily 21. The 21 is the green line. It actually closed above the 50 today as well, and it's definitely oversold, even on a weekly time frame, which is pretty rare for the dollar to be oversold on a weekly time frame. And so the idea is, well, if the dollar here starts to gain any traction, and this is probably step number 1 in doing so, if the dollar starts to gain any traction, does that then put sufficient pressure on the market to reverse the signals? And I don't really have an answer to that, right? This is still a very early kind of attempt at a reversal breakout here on the dollar, but it is something that I think you should be putting pretty high on your list next week, right? So remember the way that this works usually, and that is higher dollar, lower stocks, lower dollar, higher stocks. Not always the case. It's not always day to day, but that's generally the rule. So out of everything that we looked at, the bias continues to be short term. Day trade due to the lack of confluence amongst the markets, and then do that until one of a couple of things changes. Either the Qs start to look bad, right? And that would mean that they'd have to close below their daily 21. And then the Qs, which is the outlier, would start to look like the IWM, and that would then create confluence to the downside. Or the IWM trades above 176, the dollar then trades lower, and then that would start to create a little bit of confluence to the upside. As long as you don't have that confluence, as long as you have one market going east, one market going west, the other market going north, and the other market going south, it's almost a perfect recipe to just continue to day trade. And if you're going to day trade long, focus on one of the 7 to 8 stocks that we've talked about. Ignore the rest. There's no point in trading the rest until the market proves to you that it can do something else other than just push Google to infinity. All right, guys. Well, that is my time. Hopefully this was helpful. A little bit more of the same, but with just a little bit of a twist. Given the dollar dynamics. So try to put all that together going into next week. If you have any questions, drop them down in the chat, and be sure to leave us a like before you go somewhere else on the YouTubes. We'd certainly appreciate it. See you next time, guys. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.